we're hearing from a lot of investors who are very, very worried about their mutual funds, about their stock holdings. I want to bring in Dhirendra Kumar. Dhirendra, like Sandeep said, these are tough times, but that's an understatement. As investors right now, it doesn't look like things are going to get any easier. The BSE Sensex has lost over 1,000 points in about a day and a half of trading. If I were to ask you what retail investors should do now, and in the past you've told us over the last 5 years that we should have patience. This market has gone far beyond that normal call of patience that you advise us to have. It's time, almost, it seems like time to panic. What should we do? Where should we start panicking? Should it be our fixed income investments? Should it be our equity investments, our mutual funds? What should we do now?
No, things certainly look very grim. And many of the things, the government failing to, all the steps of government failing to evoke the kind of desired result is not working out. So, things look extremely disappointing. And last 5 years, ever since we started talking on our weekly show and taking a editorial approach, which is long-term investing, regular savings, and investing in credible funds, that has not proved, that has not produced the kind of results we expected. So things look very grim. But at the same time, when I look at some of the basic principles, I don't think they are worth, junking today. Because, of course, things look very disappointing. Things have not worked out. But what do? Should we invest in all our money into fixed income and, settle with a return which looks nice in absolute terms but is unable to beat inflation? Give up on the possibility of being well off in our retirement? I don't think that is a possibility. I don't think the other option is viable enough, or it leaves room for hope. So I would say that there will be a turnaround. I don't know when. I don't think equities don't go, there has ever been a situation that we will not have this thing. We had this, I think we had a worse situation than this in 2009. Today when I look at, the simple price to book value of the BSE 500 companies, in 2009 for about 3 months we had about 250 companies below their book value. Today we are not as bad, we are about 150, but still it's very disappointing because 5-6 years I don't think equities have produced any meaningful return for investors. I would say investors who have time on their side, they should have faith. But if you are at the same time turn little conservative, have some fixed income allocation, it will help you keep, it will help you have faith than, just be one-sided because most investors, tend to be, and
Dhirendra, I want to interrupt you there. Apart from the fact that you've told us to focus our attention on equity and not on fixed income, it does seem like that particular call might have gone bad. You also recommended that we focus on diversified equity funds. But as the market stands now, technology funds and international funds are doing far better than diversified funds altogether, which have suffered heavy losses over the last couple of months. Would we have been better off including those funds in our portfolio? Has that been a wrong call, or do you still stand by that advice?
No, I don't think it's a wrong call. I think, if investors own diversified equity funds, they own 15 to 20% of their money is into technology anyway. So you have the technology exposure just by, by tilting it, by concentrating on few sector funds which have done very well. It would have been, hindsight is perfect. But I would say that, hindsight is perfect, but, the kind of decline that banking funds have witnessed in last 1 year and the way they were running till about a year ago, it would have been extremely, I think it will be downright foolish for investors to be thinking of concentrated bets. I would say that international funds, they have a compelling case now. And we have always recommended, a certain part of your money for sake of diversification. Even there we suggest that, invest in an international fund which is better spread, which is more diversified. I think investors have few things to do. One is don't invest lump sum, diversify as much as possible, and keep away from anything which is concentrated. And I think, these principles will come in handy, and they are showing results even now. I would say that, any investor in a good mutual fund or in a reasonable fund is still better off compared to, the 4% decline that we saw on Friday.
Well,
More funds
here's
were
an
able,
example of some of the nervousness I was talking about. We have a question from one of our viewers. Abdul Rahim has written in from Dubai. He's been watching our show now for the last 4 years. He invested in the HDFC Top 200, HDFC Prudence and the ICICI Prudential Blue Chip 2 years ago based on your advice. Now, he's very worried because these funds have stopped doing well. He wants to know if he should rejig his portfolio at this point. He has a time frame of 6 to 7 years. I'm going to pull up onto our screen right now the performance of those funds in the recent past. What should someone like him do? Everybody who's watching right now who took your advice, what should they be doing with those holdings at this point?
No, my advice actually can't push up the equity markets. When equities don't do well, these funds will struggle as well. But I think, these are good funds. Rejigging also won't help. Substituting these funds with another set of funds, unless until you decide that you don't have time on your side, you have given up on equity and you want to move all your money into fixed income, maybe, consider deposit, consider FMPs. That is something which will give you continuous, will give you return continually. But rejigging your portfolio, substituting these with other equity fund is unlikely to help.
Right, so this is really a test of faith then for those of us as retail investors who've been investing in mutual funds. We have to then stay with the concept that equity in the long term, 10 years and above, will come back and will do well. Dhirendra, they're saying, don't panic, basically. Don't stop your SIPs. Don't pull your money out.